Today we're going to talk about car loans and how it affects the market.
We want to go a little bit deeper into talking like how the whole industry is doing and how it relates to the economy in the U.S.
Right.
Okay,
And we should say first that this is our opinion. We're
Right.
not professional analytics in.
Look, I have a major in finance though.
Yeah, I mean we both went to business school, so take it for what it is.
We're not advisors.
We're not advisors or anything like that. So this is just what we understand and what we think it's happening.
So basically, there's been a not a rumor, but a discussion going on that the next economy hit will be started just like it happened a few years ago with the mortgages,
With the house lending.
the house lending that banks were giving out mortgages, and people couldn't afford them. There is what's the word like.
What are you trying to say?
People are just talking about that the next
rumor?
hit, not a rumor, but I forgot the word, whatever. But the next economy hit is gonna be caused because of auto loans. They're saying a lot of banks are issuing loans to people that won't be able to successfully pay it off. The cars are getting repo. The repossession rate is on the rise, and that's just leaving a lot of money out there. Lenders pretty much
Right.
are the ones losing all the money because, again, they're issuing loans to people that won't be able to afford the loan.
Yeah.
Like, complete the loan.
Pretty much, there's a rise on the issuing of bad loans.
Bad loans, yeah.
Which is, if you think about it, it's the same that happened with the house market. Same thing that happened. Banks, lenders, they all got loose and they started giving loans to everyone. They didn't check as much if the person was going to be able to repay or anything. So pretty much the same thing it's happening. It's been happening now with the car industry.
Right.
And all of the I was reading before this. I was reading a few things, and yeah, it does says that it's all-time high since 2009, 2008, since the crash. The default on the loans, the repossessions, all of that is on the highest that it's been in a while. So those are the signs that people are seeing.
And I think it could potentially be a worse scenario, because a vehicle is a depreciating asset.
Right.
A house, yes, it fluctuates, depending on the market, but most of the time it tends to appreciate over time. A house, the thing here with a vehicle, it gets worn down, it gets miles put on, cosmetic damages and all that. So it's obviously a loan on a certain amount of money on an asset that is losing value day to day.
Rapidly. Because a house might not necessarily gain, but it's not going to
probably stay.
It's not going to lose like a car.
Exactly. So that makes it, in my opinion, a worse scenario.
Right.
And the what's going on exactly, so you understand the transaction. Okay, let's say that EZ Auto, sells a car through a lender. They issue a loan for $10,000. Okay, that's what the contract says, and that's what the customer owes to the bank. Okay, to the lender. The lender is paying EZ Auto a certain amount of money based on the loan that they issue. not on the value, like on how much the dealership pay for the vehicle and all that, but based on the loan. Okay, so let's say that the lender pays Easy Auto the value of the full contract, which is $10,000, the amount financed. Um, but then, the car gets repo 6 months from the beginning, and the car is probably only worth at the auction what, $6,000, whatever. So you're talking about a loss there, not for the dealership but for the bank, and just multiply that by a few hundreds, thousands. So there's a lot of money lost, and that's what's happening, and that's what's gonna happen, and that's what all the people are speculating and talking about, that the next economy hit is gonna be caused by auto loans.
Yeah, and I think even you can even go farther with that you just explained. I think that's probably not the issue that's gonna make the big difference. I think what will make the big difference is all of those loans, and this I'm just assuming because I don't work at a bank. I don't know exactly what they do, but from my knowledge, what I think it's happening is, though all of those loans that are bad loans, that are not really thoughtful loans, they all get packaged then, and then they get resold. So that's the exact thing that happened with the housing market back then. They were packaging all of these bad loans and selling them as like really good deals to investors. So I think that's exactly what happens with the car loans now. They package a bunch of, I don't know the numbers of these banks, but like $1 million package worth of loans, and they sell them as a really good investment to whoever, an investor, and that's when shit happens, when everything hits the fan, and the loans that the investors bought and all that are really not worth what really they paid for. Yeah. So that's what it's pretty much exactly the same. I think exactly the same as what happened with the housing market, just in the car market. It's not as big. The car market is not as big as the housing market.
It's not?
No, like money wise.
Okay.
It's not even close to as big. So that's what they, and I was reading this. That's why they say that it wouldn't be in a scenario like 2008. But still, I mean, it's something to pay attention to.
It's a big hole, man.
Yeah. I've heard that one, and I've read also about the student loan.
Oh man,
that's another one that
don't even get me started. Yeah. Because I have an auto loan, but a student loan.
Yeah.
Don't get me started there, man.
Well, I mean, that's
horrible.
Those students' loans have been an issue for a long time.
Long time, dude.
But yeah, it's getting to a critical point.
Yeah.
So that's what I've been reading, like one of those two.
Yeah, it's true. If you're watching this, we'll love to hear your input or your opinion about this situation going on. Do you think it's gonna affect the economy? How do you think it's gonna affect it?
Yeah. If someone out there has more knowledge than us,
that would be nice.
Which probably a lot of people
or something
with more knowledge than us. It would be nice if you guys can discuss and explain a little bit further what we're talking about. That could be nice. I mean, it's
the economy. It's a cycle.
Yeah.
Ups and downs. It's normal, I guess.
Yeah, but it's normal in an economy like this one, which is a debt-based economy.
Yeah.
And when you're getting into debt, you really don't know everything that happens behind a loan, behind a debt, which is everything that I was saying. Like they get packaged, they get resold, their investment for for corporations and stuff like that. So the whole economy is moved by debt,
loans,
loans and all of that. It's a really huge thing, confusing and and everything. Yeah.
But that's what we have for today, guys. I think it's a very interesting topic, and there's a lot more to it.
Way more to it.
Yeah, and a lot more things to consider. Different point of views. But that's what we have for today. Let us know what your opinion is, if you know or have more information on the situation, or what do you think is going to happen. Do you think it's comparable to the house market crash that happened, in 08 or 09? Let us know. We'll love to discuss and see different point of views on other people.
Right.
We'll see you guys.